Hi, everyone. This is Jason Bierach of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast. And today's special guest is a first-time guest, even though this is our second recording attempt. He is founder of Cryptoversity, host of the Cryptoverse podcast, which has over 40,000 subscribers. He's a libertarian computer programmer and a freedom fighter. Chris Coney, thank you for joining me.
Absolutely delighted, Jason. Been looking forward to it.
Yes, and I'm glad to actually share your thoughts with listeners. It was such a great first interview. Unfortunately, it went up to heaven.
It did.
So please tell the listeners about your background, how you found Bitcoin, and why you like Bitcoin, blockchain, and other crypto.
Okay, sure. So background. My studies were in computer science and business information engineering. That was my degree. And prior to that, I'd done we have college in the UK, which is in between sort of high school and university. It's a weird thing that we do. We call them A levels, but so you do like your high school, then your A levels, then your degree. And even at A level, I was doing business studies, law, IT, stuff like that, English language actually as well. So that was an interesting mix of skills that I've used since then. And where I really got into, became friendly with the digital world. I've always been friendly with it. So I just have an intrinsic understanding of it. Like when I was growing up, my dad owned a computer rental store, like a computer game rentals and old VHS tape rentals and things like that. And just as console gaming was coming out, he opened up a store renting them out because they were horrendously expensive. And people didn't want to buy a game and not like it. So you just rent it. If you like it, you could buy it. So as a kid, I had access to all these games that weren't rented out. So when they were in, I could just play them. And then if someone came to get them, I'd just have to surrender them and give them back to the customer. But it meant that I got free access to all these games and so on. So that's kind of my base layer of experience with technology. And I just took to it. That was my thing, right? And it was beneficial that my dad did that. Because I don't think it was because he had the computer store that's why I'm interested in it. I think my interest was there, just happened to find an environment to flourish because of that, right? So that's where part of my self-discovery was, this is the kind of thing I'm interested in. And then being a mad Star Trek and Star Wars fan and one of those sci-fi kind of minds, I was like, tech is what I like to do. So eventually I did the computer science degree, and I guess I'd say I'd lost my way after university because I knew myself. Well, I say I knew myself pretty well. I thought I knew myself pretty well, liking the techie stuff and all that. But then I went off on a bit of a tangent because when I finished my degree, I got into a bit of a panic, quite frankly, because there was a lot of statistics bounding around, only a small percentage of graduates are left unemployed after 3 months after their degree or something or other. This is back in 2001, right? So was it 2001? Yeah, way back there. So at the time, this was pre-economic financial crisis. It was boom times and all that kind of stuff. So the job market was pretty good. And I just didn't want to be one of those statistics that 3 to 6 months after their degree, I was still without a graduate job. So I think that distracted me from finding a career that I was a fit for. I just started chasing anything and everything. And eventually ended up setting up a web design agency, which was somewhat, tech oriented. And then I went into online marketing and then just general marketing. And then I'd really gotten away from the techie stuff, right? All throughout that time, I became interested in economics and just studying the world at large and the bigger problems in the world. And that's when I was like, geez, there are some serious problems around here. It's not as innocent as you think when you're a kid, when you really start going out into the world for real, which to me sort of happened after I'd finished formal education. That's when the next step isn't laid out for you, right? Because you do school and then there's the next thing and there's the next thing. And when you finish your degree, you then kind of opt to do a master's or a PhD. It's not a default thing. You have to actually put effort into that. So I became exposed to the wider world. I was like, there's tons of problems here. And then went about wondering how to solve the world's problems, but at the same time relating to a lot of the problems in the world because I was a human being, right? And the human condition affects me just the same as everybody else. So it was this kind of dual study, a quest to make myself feel better about being in this world, but also at the same time going, well, everyone's experiencing this, right? Finding economic opportunity, fulfilling your dreams and financial freedom and all this kind of stuff. And the more I studied economics and the banking system and even the education system and just the general environment that we live in, I was like, wow, this is a tough gig, man. It seems like this this deck is stacked against us significantly around here. So that was like a long time study trying to figure out what was the linchpin to this whole thing. Like, how do we really turn this around for everybody? And that's where I really became interested in economics, because I thought, well, it's got to be the money system, right? Because if we could solve that, it then has this ripple, this shockwave effect into everything else. I sort of like boiled it down. That was the systemic thing that was messing everything else up in my mind. And if we could flick that domino down, it would have this cascading effect on the health system, the education system, government, the finance system, the jobs market, the business market, the environment. All of this stuff would suddenly start turning around in a positive direction if the economic system were more equitable, right, and freedom oriented. So you can see this is setting me up perfectly. And this is obviously pre-Bitcoin, right? So this is setting me up perfectly for, I think it was 2013 it was when, excuse me, I'd finally left the marketing industry and sold my business, because I'd finally figured out that wasn't really what I was putting myself to do, and just sold it without anything else to do, quite frankly. It was just one of those things where I was like, I don't know what else I'm supposed to do. I just now know for sure it's not this. So the logical thing to do is get out of it. And as luck would have it, that was the same year that I discovered Bitcoin. It was almost like, oh my goodness, if I was a lock and this were the key, it would be the one that unlocked it, kind of like the combination and the lock. I was like, it was almost uncanny, to be honest. I was like, this was like almost made for me. Like I was the key and it was the lock sort of thing. And I was like, this is what I've been prepared for all those years, even pre-Bitcoin, when I was studying economics and the world's problems and knowing what the problem was. The money system wasn't freedom oriented, but not being able to find a solution to it. There was nothing that existed at the time that was the solution as far as I was concerned. I studied gold, silver, and all that sort of stuff. I thought, yeah, that's as good as we've got. The internet's got to be something to do with this. But then, like Bitcoin, the digital gold was like, yes, this is what I was looking for. So then I was like, that's the thing I'm looking for. I'll just figure out what my strengths are. It's fairly logical that I put these two things together and then make that my focus. And so that's kind of the backstory.
Very cool. And you have the technical background, since you did computer programming, you studied it, to actually understand a lot of the stuff. Whereas I come from a finance background, money and finance, and I don't understand the technical aspects. I have to rely on experts like you to try to explain this to me in a lot easier to understand terms.
Sure. Well, it's in layers, right? So this is the thing about Bitcoin, and it's magical in this way, is that it's this really interesting and rich soup, because it's not really just money. It's not just computer science. It's not just like sociology or philosophy. It's all these things. It's this intersection between all of these disciplines, and it brings all of those disciplines and all the people in those disciplines together. So none of us individually understand Bitcoin. We can't, which is brilliant, because it kind of forces us all to cooperate. Like the economists have to cooperate with the computer scientists, and they swap ideas and knowledge, and the philosophers swap ideas, the sociologists and the all the game theory folks, and we're all like trying to figure this thing out because it's so complex. But this perfect balance of all of them, one of the benefits is we start building relationships across disciplines, which is absolutely superb in my mind.
I agree, except for the Bitcoin is racist, math is racist, yoga is racist crowd. That's kind of getting ridiculous, man.
I'm not familiar with that one.
Yeah, it's been coming out lately. There's all these articles that Bitcoin is racist. So it's just, and then a couple days ago there was yoga is racist now too. It's getting ridiculous, though.
Interesting.
The politically correct culture.
I don't see how math can be racist, though, because it's an objective science. Well, that's like saying gravity is racist.
So I agree. They're saying, though, that poor people and minorities, people of color, don't have the opportunity to learn as good a math as middle class and higher net worth people, normally white people. That's like what the Marxist university professor argument would go.
Well, that's brilliant. Which is why we need Bitcoin. That's exactly the point I just made about the education system, right, is such that richer countries generally have better education systems, which does create inequality, right? So I'm all for equality of opportunity. So the internet was the first wave of this. And then what Bitcoin and blockchain technology is doing is democratizing money and information now. So there's a transition going on where we will get to the point where everybody who has a smartphone and an internet connection will be on a level playing field. It won't be so much how you'd say, well, this person lives in a third world country or underdeveloped or first world country, etc. That will not be the defining factor. The defining factor will be access to the digital economy, and that will be as much as getting a smartphone and an internet connection. And there's always the talk about the cost of a smartphone is declining all the time. And you can go on Amazon and find like $20. You can buy a fully featured internet-enabled smartphone that will run Android apps, which means that you can get YouTube and you can get a Bitcoin wallet, right? So there you've got free access to a lifetime, several lifetimes worth of education, right? I've made 1,200 episodes of the Cryptoverse podcast, which is all free, right? So everybody can go through the back catalog and pick my brains, right?
Yep.
There's years worth of content there, right? So that barrier has been broken down. You don't need any money for that. And then now you've got the cryptocurrencies. And you don't necessarily need any money for that either, because you can do work for these networks. For like Steam, you can post content on Steam and earn rewards for it, or you can apply for a job with the Dash network and say, I want to be a promoter for Dash in whatever country it is, and then you can get paid for that. So it doesn't even require you to put any money in. It requires you to put your ideas, creativity, labor, and time into it. So again, that's completely bypassing the fiat currency system, which a lot of these people are excluded from.
Those are great points. Those are great points.
You know what I'm saying? So I'm on side with these people who say that we don't have an equitable system. However, don't throw the wrench in the machine, right? Bitcoin's coming to save the world from this problem, right? Don't go and short circuit the solution while it's just being rolled out, because you'll manifest the opposite of what you actually want, which is a fairer world that will bring about a more equitable education system and a more equitable economy.
Yeah, so I agree with you that Bitcoin is not racist, just like math is not racist. And a lot of the people that say that there's problems in society, they just say that they're normally they say that they identify a lot of the problems in society, but their solutions are wrong, or sometimes they come up with they identify incorrect problems. So, when they're saying that Bitcoin is racist, the majority of Bitcoin trading volume, Chris, is still in Asia. So they're trying to blame things on white people, but tons of there's cryptocurrency trading bans, there's thefts in Japan, the South Korean government, because there was a speculative frenzy there, and I think people were day trading that, even quitting their jobs to trade crypto. And
right.
So it's kind of ridiculous that like they're blaming all the problems on white people when the evidence shows that Bitcoin is universal now.
Well, I don't understand. It's the whole thing about these Bitcoin in particular and other cryptocurrencies is Andreas Antonopoulos taught me this. Bitcoin does not recognize personhood. That's the thing about it. Like a bank account, a bank recognizes personhood, and you know that because when you have to open a bank account, you have to provide ID, with a photo of what you look like, where you're from, where you live. Bitcoin doesn't think like that. It recognizes cryptographic addresses, meaning if you download the blockchain.info Bitcoin wallet and then 10 minutes later you have a Bitcoin address, it has no link to personhood at all, right? It doesn't matter what color your skin is, your age, it doesn't figure into it at all.
Yep.
And Andreas goes on to say, right, once you get that this is a system that doesn't recognize personhood, in the future you get to the self-driving, self-owning Uber, where the car owns itself, has its own Bitcoin wallet and its own private key that no one else knows, takes payments from the passengers in Bitcoin, detects when it has need for a fuel, drives itself into the garage, pays out of its own Bitcoin wallet for the maintenance, and then drives out and goes back to work. So that's proof that the whole cryptocurrency networks, they do not recognize personhood. So this is what boggles my mind. How can that? That's that machinist. I don't recall that, right?
Yeah, I think this is politically correct culture.
We'll be right back with Chris Coney after a word from our sponsor.
Do you work out routinely and eat healthy almost all the time? If you eat paleo or vegan or work out routinely, you may be eligible to save up to 33% off on your life insurance thanks to Health IQ. Health IQ is a venture capital-backed, big data technology life insurance company that offers customers life insurance at special rates by using the latest technologies. For more information, please go to healthiq.com/WS4MS. That's healthiq.com/WS4MS. Now, switching gears, about a year ago, Bitcoin had around 80% market share of dominance of all the cryptocurrency market cap in February 2017. In November, it had dropped quite a bit, recovered to around 60% in November and December of 2017, and now it's down to a little bit below 34%. Why do you think that has happened? Is it because of speculation? People can't afford a Bitcoin, so there's a lot of get-rich-quick people, fear of missing out, who've moved into these other altcoins? Or do you you think there's really legitimate problems with Bitcoin that need to be fixed? And so, Ethereum, Bitcoin Cash, some of these other altcoins are for fundamental reasons or technical reasons actually stealing market share, and it's justified that Bitcoin has lost this market share?
It's a good question. I think there are multiple forces at work. You put a good one in there, which is, to me, it's a silly one, but it's realistic nonetheless. It's the one where so few people understand that you don't have to buy a whole Bitcoin. I'm continually surprised. I always assume people understand that, and I continually come across people who go, "What?" And I go, "Oh my goodness, that's right." And they have to explain it. Like, you don't have to buy a whole Bitcoin, right? Like, you don't have to buy a whole 25 kilogram bar of gold. You can buy a coin, sort of thing, a little piece of it, or a 1 gram piece. So that boggles my mind. That's actually become a bit of a strategy amongst new cryptocurrencies that launch via these initial coin offerings. One of the strategies is people like to own a lot of the coin. So if you start your ICO at like $2 a coin or $10 a coin, then someone with $100 to invest goes, well, I'm only going to end up with 10 coins. Whereas if you launch at a penny, people go, oh yeah, and get several thousand of them. It's completely illogical, right, to us economic guys. However, that doesn't matter. The market isn't rational. So you just got to go with the way it actually works. So I do think that's got a lot to do with it. The high price of the coin puts people off, and they may go for your Doge coins or, any other number of coins that have a much lower individual price. Now, that may be because there are billions and billions more in supply, but again, that's a logical description which doesn't wash with a lot of people. So that's got something to do with it. Also, just increased competition, I think, is another force that's acting on Bitcoin. Back in the day, there was only Bitcoin, so it had 100% market share. And of course, naturally, as more coins have been launched, that has eroded Bitcoin's market share. But at the same time, I would say that's somewhat benefited Bitcoin, because every new currency that launches and then starts marketing itself, it reaches people who have never heard of cryptocurrency before. So their first experience with crypto will be the thing, whatever they heard of, whether it was Dash or the Dogecoin or whatever it happened to be. That is their first experience of crypto. When Bitcoin was the only one, of course, everyone that heard of Bitcoin, came into crypto that way because it was the only one. But as time goes on, we've now got this big net, all these fishing rods out there in the water. And every single cryptocurrency has the potential to bump into someone who's never discovered crypto before and bring them in. So that's the competition aspect of it. With that also, though, comes the different uses of this blockchain technology. Bitcoin was designed to be a currency. Specifically, it's peer-to-peer digital cash is the way it's described in the original white paper. But since then, these clever developers and mathematicians are like, what else can we do with this blockchain technology that Bitcoin is based on? And that's sort of where Ethereum came from. Instead of these dumb transactions that just go from A to B and that's the end of the process, and then it has to be initiated again from B to C, I thought, well, what if the transactions could make decisions, right, based on what happens in between the sending and the receiving? And that's essentially what a smart contract is. It's a contract that can make decision based on predefined criteria. Like in the case of launching an ICO, it's like, if an Ethereum address sends us some Ether, after this date, send them back this many tokens. And that has no human intervention whatsoever, So the reason why I'm talking about this is because when we identify those alternative uses and we say, well, Bitcoin doesn't have those abilities and it wasn't really designed for that, that's when another coin is born and a load of capital flows that way, because I don't think Bitcoin ever was designed to be all things to all people. If it wants to be a peer-to-peer digital cash system, great, that's what it should be, and it should be that to the best of its ability. It is almost like think of it like a company. I know it's not a company, which is another mistake people make. I think Bitcoin is like PayPal, which is a concept to get your head around, that these networks, they are these decentralized autonomous organizations, these DAOs as we now call them. So that's something else that people need to get their head around.
I've actually met financial professionals, Chris, who have told me not to buy Bitcoin. They've put out on Twitter telling people not to buy Bitcoin because Bitcoin's going to run out and there's not going to be any more supply of it. So then there won't be any uses. People won't be able to transact. I was trying to tell them that, the way the blockchain was set up with the digital mining, it was set up to mimic like gold. So it becomes harder every couple of years, right? Just like it is to mine gold. And so people are going to be mining fractions of Bitcoins in the future, and people can buy fractions. So the average financial professional, I think they're starting from a really low knowledge base.
There must be, because the way they talk there, that immediately reveals some ignorance, right? Like, because that's based on the idea that once all the bitcoins have been mined, everyone's going to keep hold of them and never spend them, which is daft, because at that point, right, the purchasing power will have gone up so much that the urge to spend it to pay off your mortgage, buy a yacht or a Lamborghini or your retirement or whatever will be so strong, right? Because everyone's got a price at which they're willing to sell their Bitcoin. It's just that, we reach these different price levels and some people sell. Even when we hit 20,000, the very fact that the price was 20,000, that meant someone was willing to sell and someone was willing to buy, right? So a whole bunch of people bought Bitcoin at 20,000 because to them, that was a low price compared to where they expected it to go. So if you bought it at 20,000, you would, in your mind, whether consciously or unconsciously, you'd have a price at where you would feel comfortable letting it go, right? And feel that you got a return. So that's all up and down the spectrum, and that's really the market, isn't it?
Yeah, and a lot of people still don't understand that you can buy fractions, like you said. I think that's a great point. And Bitcoin, for the 7 years that this experiment has been successfully working with Bitcoin, it's had a lot of 50% correct. I mean, there's been a lot of 50% or more corrections. You said you got in 2013. Did you get in before or after the correction where it went from $1,000, it went parabolic up to 1,000, then it crashed down to around 100?
I can't remember, actually. The reason I say I can't remember is because I haven't always been glued to the Bitcoin charts. The other day I was on my local bitcoins.com account because I thought, when was the first Bitcoin I ever bought? So I went and looked into my account, looked at my history, and went all the way back. And I think I found a trade that I did. I bought a Bitcoin for like £155, which is about $200. So, and I wanted to know, what was the first Bitcoin I ever bought? How much was it? And I can't remember. It must have been 2013. So I think that was after the major run up to 1,200 and then the massive crash down to whatever it was, $180 or something. So yeah, I think I came in after that.
That's good timing.
It was.
Now I interviewed Trace Meyer yesterday, and he seems very bullish on the Lightning Network. I've been researching this more. Obviously, I'm a layman. You're an expert on this. It seems that it's very promising with the Lightning Network, but when I've researched this with articles and YouTube videos from other people working in the technology space, it seems like there's a lot of problems that have to get solved for the Lightning Network to be successfully worked out. So do you think this is going to happen in 2018 where the Lightning Network goes live, or do you think this is years away and it may not the Lightning Network may not solve the problems that a lot of Bitcoin bulls are claiming?
Okay, I think that's another misunderstanding. The Lightning Network is live. It's live on the main Bitcoin network right now. I'm just looking at my stats. There are 402 nodes on the Lightning Network already. There are 1,000 payment channels that in between those 402 nodes, and the total processing capacity of the Lightning Network right now is just under 4 Bitcoin. So the Lightning Network is here. It's here. It's been here for a little while, and it's now live on the main Bitcoin network. Now, most of these nodes, there'll be developers and people testing the system. Even the Lightning developers are saying, look, the average user should not be establishing these Lightning payment channels because it's real Bitcoin. And if it messes up, potentially you'll lock your Bitcoin in these payment channels forever, sort of thing. Despite that, there's still all these people who have decided to set up nodes and channels and put 4 Bitcoin so far, which is equivalent today of about $35,000 into these payment channels on experimental software. So that's the first point. The Lightning Network is here. It's live. If you have the expertise, you can set up a Lightning node today and start transacting on Bitcoin on the Lightning Network with these instantaneous and almost free transactions. I mean, the fees are so small you can barely measure them, but you can because there's 8 decimal places on Bitcoin. So the Lightning Network is a reality. There's a number of sites like I can't read out the URL because it's complicated, but there's this site I look at every now and again, and it draws a visual graph of the Lightning Network. The major concern with the Lightning Network is that it will develop hubs, right? Bitcoin was popular because it was a truly peer-to-peer system in the sense that there was no central point, there were no middlemen, it was literally person to person. And the average Bitcoin node connects to 8 others, and then they connect to 8 others, and through the network effect, you can get to everybody. The difference with the Lightning is that it works more like the internet in the sense that when you send a payment, it isn't exactly peer-to-peer. It has to go from you to a neighbor and then hop along until it finally reaches its destination. Now, it sounds similar to Bitcoin, but it's not. With a Bitcoin transaction, when you broadcast a transaction on the Bitcoin network, you pass it to the 8 nodes that you're connected to, and they then share it with everyone they know, and everybody hears about that transaction like within milliseconds, right? So it's effectively instantaneous. And everybody knows Chris just sent Jason 1 Bitcoin. Boom. And that's it. Everyone knows. Then that gets put in the next block and it's permanent. The difference with Lightning is that not everybody does know about the transaction. So without getting into a deep explanation of how the Lightning Network works, it works like the internet in the sense that if I on my desktop computer request, I don't know, let's think about it, like even youtube.com, right? My internet service provider has to work out, well, where is the server that is hosting youtube.com? And it may be in like Georgia, USA, somewhere or other. And once it's worked that out, it has to map a path through various other servers between me and that server physically, like along the world, so it can pass the traffic along that route. Same thing with the Lightning Network, right? If I'm on the edge of the network, which most users will be, just like most internet users are, my home computer, I'm connected to my internet service provider. I have one connection to them, which is my broadband internet connection. That's what I pay them for. And then they go out and fetch all the information from the internet for me. So the internet service provider is effectively the hub, right? There are downsides to that though, because that's a central point of failure, right? Mm-hmm. It's no longer peer-to-peer because that's a middleman, and they can also censor the traffic or do whatever the hell they want to do, right?
Yeah.
Now I could
hack like with the Bitcoin exchanges, right? Yeah.
Exactly. So I mean, if you want to make it peer-to-peer, you could sign up with like 10 different ISPs and have 10 broadband connections, and then that's just ridiculous though, because you pay 10 fees for your broadband internet, and it's such a monopolistic industry. There aren't 10 providers, so and there isn't 10 different infrastructures. There's one fiber optic cable that runs down my street, which is owned by one of the companies. So you're pretty much screwed there, right? So back to Lightning, you can see if you look at the I might send you this link if you want to pass it out to the listeners. But if you see it, you'll know exactly what I'm talking about. When you look at this graph of the Lightning Network, there is one node called Sleepy Ark, which seems to be like uber interconnected. It almost looks like a social network in the sense that this Sleepy Ark node, it's so well connected, it's like a socialite, like everyone knows it, right? And then it's got loads and loads of single nodes connected to it, but it then can get out to the rest of the network, kind of like an ISP. So there are I can't even count them. There's so many of these individual nodes that only have a connection to this hub, and then it's the Sleepy Ark node that gets them to the rest of the network. And the actual economics of the way Lightning is rigged, the incentives are aligned such that hubs make the network more efficient and effective. So just like we know in economics and in cryptocurrencies in general, all you have to do is tip the incentives slightly in one direction, and that is where the water will start running in that direction down the hill. So the Lightning Network, this is the concern, and it's already happening. You can see it. The concern is that the scales are tipped slightly in the direction of creating hubs, and that causes a problem because principally, they are now effectively a middleman to the transaction. So unlike, go on.
It sounds like added security concerns. And then I've also heard, I was watching a video from Ryan Charles last night, and he said that basically you have to be online all the time for it, which is another problem they're going to have to solve.
True. But I mean, there are a lot of technical barriers, but like I was saying, like trying to figure out how do we solve the world's problems. I was looking for that Jenga block at the bottom that I could pull out, and I believe it's the money system. So there are lots of other problems in the world I want to solve, but it'll be easier if we pull the bottom Jenga block out, which is the financial system, and then the rest of them will come tumbling down. So similar, when I'm looking at the Lightning Network, go, okay, what's the one detail that could bring the whole house of cards down? And to me, it would be regulation. So with a Bitcoin transaction, the miners and the nodes they're not classed as money transmitters because it's peer-to-peer and because everyone gets a copy of the transaction instantaneously. So that's that. However, with the Lightning Network, there is a distinct relay that takes the money from you and passes it on to someone else, right? There is a distinct path, and there may be 7 or 8 different hubs involved in between my computer or my node and your node, Jason, right? It might have to go through 4 or 5 different Lightning nodes, but it doesn't go through all of them. This is the key. So each of those nodes in between you and I are transmitting money on my behalf. That's a significant difference in the eyes of the regulators. And the concern is that the IRS, Her Majesty's Revenue and Customs in the United Kingdom, that is a place to approach and say, you're a money transmitter, you fall under the regulations of being a money transmitter, you must now identify all the people you are transmitting money for and do the KYC, and that will just that will just nuke the whole system. So I'm not saying that's what I think will happen. I'm just explaining the concerns that I hear.
Yeah, I think that's how Charlie Shrem got in trouble, because he was a money transmitter, and he was supposed to know all of the people that he was selling the Bitcoin to. Question from our mutual friend Phil Kennedy. So how do you think Bitcoin futures have impacted Bitcoin? Do you think that's led to the crash in price? Because pretty much since the Bitcoin futures contracts launched in mid to late December of 2017, the Bitcoin price topped then around 20,000, then it's gone down.
Yeah, I honestly don't think it is. I've been going backwards and forwards on this, trying to really piece it all together. One of the things that I thought the other day that I threw into the soup was there's a limit in the futures market. It's a 20% price swing that prevents the futures from experiencing the same volatility as Bitcoin. So the futures contracts can't swing in price by more than 20% in a day, which is interesting. So there's a boundary there. I don't know whether they closed the markets or what at that point, but I remember reading the specifications as saying that there was an upper and lower limit of a 20% price swing to prevent like the volatility within the futures markets. Well, that creates a disconnect in between the actual Bitcoin market, which sometimes swings wildly more than 20%. So I'm still not totally clear on, because people say people are using the futures market to manipulate the price of Bitcoin. I still can't actually get my head around that. And this might be where me as a self-studying economist, computer science expert really needs an expert future trader to sit me down and explain in detail like how futures work, and then I could explain to them how the Bitcoin markets work, and then we could put our heads together and actually see a direct link between one and the other. But so far, I'm not. I don't possess that depth of expertise in futures trading.
That's fair. A lot of the hedge fund managers I've spoken to who didn't buy any Bitcoin at all during this bull market run up, they actually were looking for ways to short it. So they might have been the ones that participated in the futures markets and shorting it. But the thing is, that futures contract, it doesn't actually have to deliver any Bitcoin, which is ridiculous. It's all cash settlement. So it just seems to me like a money grab from the exchanges to hop on the cryptocurrency trend to get some of that trading volume.
Well, you could short Bitcoin before that, like BitMEX, for example, which is like a ridiculous leverage exchange. You can do like, I think 10 or 100x leverage on Bitcoin trades. It's absolutely ridiculous. And they let you short it. I mean, even Poloniex will let you short it. They short it in the sense that you can borrow the Bitcoin from other traders, or I used to do it. I used to put my Bitcoin on deposit with Poloniex, and I would get in like a 0.05% interest per day on my Bitcoin because it was being loaned to traders, right? Because they could just borrow it, sell it today, and then buy it back later. So that's effectively shorting it, right? So they could just borrow a ton of Bitcoin, sell it into the market, right? It's not a paper short. It's an actual short. You borrow the Bitcoin, you sell it today, you wait for the price to go down, you buy it back, pay off your debt, happy days, right? So the ability to short Bitcoin in a true sense in the real market has always been there, but we've never seen a run up to 20,000 and a crash down to what is it today, like 9,000. So I'm not buying it.
Okay, fair enough. Yeah, I mean, I've studied the argument on both sides. I think there's some merit to both. It's just with all the central bank intervention and the politicians getting the rules changes in so many different countries, it's just tough to know what's a real market move and what's an intervention or a market manipulation or someone trying to cheat to make money now, because there's so much fraud.
Absolutely. And sure. And this is the challenge with economics not being a hard science, because the price is a gross oversimplification of reality, right? However, it is the peak of the triangle. All that, the base of the triangle will be the infinite amount of detail that's going on in the economy. Everyone's thoughts, all the different market forces, the whole world basically, all the activities at the bottom of the pyramid, and then it all interacts and different forces act on the price up and down. And then you get to the very point of the triangle, and that becomes the price at this moment in time. And that price has priced in all of the factors that are acting on it, positive and negative, right? So to say, like, why did the Bitcoin price go up or down? You can't pin it on, you can never pin it on one thing, because this is the thing about economics and free markets and its chaos theory. There are so many forces acting on Bitcoin at all times. You can say, well, this had an impact, but neither can you get any precision about what degree of impact. And there are also tons of forces acting on it that you don't even know about. You know what I mean? So are futures affecting it? Probably, maybe, but that's about best as you can do, right?
Yeah, we don't know how much. And so, the academics, a lot of the ones in the business schools and even academic economists, they say that markets are efficient and the price reflects all the available available information and that there's rational market players, which I think is BS, because I think most of the people involved in markets are basically irrational, and they're either relying on the two most powerful emotions, either fear or greed. So, in the case a couple months ago, when we did our first interview a few weeks ago, the Bitcoin and cryptocurrency prices were up. Ripple was literally ripping. It was going like crazy. I think it was at $3.30. I did a short video saying it was ridiculously, it had gone parabolic. And it was probably going to crash. And look, now it's down around $1 or something.
Yep.
And I was getting a lot of hate, on Twitter from all the crazy Ripple crowd. So that's what I think. So I don't think that markets are efficient. I think, they just oscillate between greed and fear, and mostly they're irrational and emotional.
They are irrational. And I agree with you with regards to the flaw in not classical, but up until this point, economic thinking, because it's based on the idea that market participants have perfect information. We don't, right? We have five senses and a limited range, right? So our radar, which is our radar for information, the range has a limit, and every piece of information that falls outside of our radar range, we're not taking into account in our economic decisions. So that is where the typical economic science falls down, because it's assuming all market participants have instant access to every piece of information, which I call perfect information, and are making rational decisions on that basis. That's completely false. I mean, it's illogical as well.
Yep, 100% agree there. Now, switching gears, there's an article going around Wall Street claiming that after 10 years, there's no uses whatsoever for blockchain technology. How would you respond to that?
Again, clear declaration of gross ignorance, right? This is why I don't come to conclusions very often, right? Because I know my radar is limited, right? So there's so many people in crypto that are so certain that they're right, It's just incredible to me, because that to me is also, they're not even aware of their lack of awareness. I don't know if that's kind of a mind-blowing statement, but that to me just go on.
Sorry, Donald Rumsfeld actually said there's known unknowns and an unknown unknown. So
exactly. Exactly. You don't know what you don't know till someone tells you or it smacks you in the face. That's typically how it goes, right? So I can provably refute to that claim. So I think I've already mentioned Steam once during this conversation, but Steam has done remarkably well weathering the market volatility lately because it has a real world use case. And that real world use case is it's a blockchain you can build social networks on. And there are now half a dozen different social networks built on the Steam blockchain. There's Steemit.com, which is like Reddit, but with a cryptocurrency incentive and reward system. There is DTube, which is YouTube built on the Steam blockchain. There's DLive, which is a live streaming platform built on the Steam blockchain. There's DMania, which is a meme site. So you make a meme, post it, you earn cryptocurrency rewards if people like it and upvote it and so on. There's Utopian, which is like GitHub. It's like a repository for open source code that's built on the Steam blockchain. There's busy.org, which is another social network like Facebook built on the Steam blockchain. There's Zapple, which is like Twitter, but built on the Steam blockchain, right? So you have one account on the Steam blockchain, and then you can log into all these fantastic apps that are built on it. So that alone completely refutes any notion that there isn't an application for blockchain technology. And I've only given you one example.
Completely agree. I went to the DC blockchain last March, and there was panels there about how blockchain technology is already being tested in about 6 or 7 different industries. So you have healthcare, you have insurance, you have financial derivatives, you have there's just so many more. Even governments, I think, Chris, are actually looking at putting titles of land on there in the blockchain as proof. So you can't fake a title. And then also, if you graduated from a certain university in a certain state in the United States, I think the state of Illinois is going to be putting proof of your degree, so you can't fake a degree on their own blockchain as well.
Absolutely. Superb. And actually today on the Cryptoverse podcast, I covered the fact that Venezuelan government had finally signed off and released the white paper for their ICO, because they're launching the Petro cryptocurrency, which is a cryptocurrency that's going to be backed by Venezuela's oil reserves.
Well, I don't like Venezuela very much. I don't like what Chavez and Maduro have done there. So I think this is a last-ditch effort, because Venezuela is a corrupt socialist government that has stolen everything. I mean, their oil reserves, their military has been buying their oil for like pennies and then selling it out of the country for full price.
Sure.
So there's just enormous stuff there. Have you heard, though, that the people on the ground in Venezuela have been, because electricity is subsidized there and so cheap, they've actually been mining Bitcoin and cryptocurrency there to buy food online to save themselves.
That's right. Yeah. So the way it goes is they mine Bitcoin and then they use a service called purse.io, which basically allows you to buy stuff on Amazon at a discount by paying with Bitcoin. And the counterparty to those transactions are people with Amazon gift cards that don't want them anymore. So they buy the stuff for you with the Amazon gift cards, have the items shipped to you, and then you give them the Bitcoin. So that's how that works. So what the Venezuelans have been doing is going on Amazon Pantry and then paying with Bitcoin and then getting food shipped to them. And then the people with the gift cards that are buying the food for them get the Bitcoin. So it's pretty cool. That's what purse.io does. It allows you to spend Bitcoin on Amazon and get a discount. Very
cool. And it's already saving lives. And because of, the socialist government down in Venezuela, there's food and there's shortages on basically everything. It's a really sad situation. I think the petrocoin is going to fail because of how corrupt everything is. The oil reserves, man, are a mess. Their oil industry is a total mess. They actually haven't reinvested profits in decades back into their oil industry. It's I wouldn't be surprised if their refineries just shut down. Their oil production's actually down, I think, about 70% in the last 15 years since Chavez took.
Well, someone commented on today's episode saying the trouble with Venezuela's oil is it's a sour oil, and it requires more specialized refinement. And there's two problems there. One, a lack of investment in the infrastructure, and two is brain drain. So the expertise in this area have pretty much left the country because it's a mess. So that's a double whammy of a problem.
Exactly. Yeah, a lot of the Venezuelan oil people have gone to Colombia because Colombia is more free market and there's a lot of Colombian oil companies there. And then they've had to export the oil, like you said, to a lot of the Gulf refiners are the ones in the United States who actually refine the oil. So even though, Donald Trump and Obama were on TV bashing like Venezuela, that secretly most people don't know that we actually were importing a lot of their oil. So, this is just how governments work. So they'll say something in public that's bad. Well, we really need this from you.
Yeah, absolutely.
Well, let's transition again. So what percentage of your investment portfolio is in crypto? Because when I talk to some of my listeners, it seems that they have, in my humble opinion, way too much of their total net worth in cryptos to where if I had that much, I probably wouldn't be able to sleep.
That's the real test. That is the real test. So never invest more than you can afford to lose type of thing. And this is the value of these big market corrections, because if you get emotional feedback, which is like anxiety and sleeplessness, that's kind of your unconscious mind telling you you're overcommitted, right? And that's the truth. You can say, no, I'm accepting the risks. I'm accepting the risks. Then when there's a correction, you freak out. Then basically your unconscious has just called BS on you, right? So that's how you know. Now, it applies to me as well, right? So when there's a market correction, I'm like, oh, goody, right? And then I check in with myself. I go, how do I feel about it? Fine. And I go, good. I'm within my risk tolerance. Now, this is different for everybody. Just like what kind of investor are you? Are you risk averse or adverse? So in terms of how much of my portfolio do I have in crypto, about 95%. And the general advice is your exposure to crypto should mirror almost exactly your depth of understanding. So I'm not suggesting that anybody go out and commit 95% of their portfolio to crypto. Bearing in mind, I've been in this for 5 years, full-time, actually more than full-time. This has become my entire life, right? Other than, I can't even think what else I do, to be honest, other than, I actually can't think of anything else I do other than eat, sleep, and study cryptocurrencies and create content around it. That is the level that I've committed myself to it, because this is what I was put on this earth to do. So that's why, logically, 95% of my portfolio would be in crypto. In addition to that, though, when we have a mad correction, like we did from $20,000 Bitcoin down to $9, I feel a tiny bit of anxiety because I don't like numbers going down, but it doesn't stop me from sleeping, quite frankly. I'm like, it doesn't, because I've got confidence in it, and obviously I've got a more lower level of understanding, both technically and economically, that I deeply believe, it's going to be, well, it is going to be, it already is. Genie's out of the bottle. This is the new economic system. Right. And a temporary correction in the price, to me, makes no difference to my understanding and belief in where it's going. So I don't react to it. Actually, I do react to it. I'll buy some more.
Okay. So you've been buying some more. You've been buying some more Bitcoin, or have you been buying other altcoins in addition?
Yes. Today, let's see. I went on a bit of a shopping spree because we had a nice price drop today. So let me just pull up my shopping list here. Okay, I bought 8 different coins. So I bought some Bitcoin, I bought some EOS, which is probably my number one favorite project of all time, some Dash, some Populous, Litecoin, Digibyte, Neo, and Bitcoin Cash.
Now, since you have so much of your net worth in cryptocurrency, how do you store them? What are the safe ways to store them? Because I get asked this a lot. My friends have told me they like Trezor, and some of my friends own a couple different Trezors for diversification. Do you think that's the best way, or do you have other ways?
Yeah, the hardware wallets definitely the best way. The biggest challenge, because we have this principle investing of diversify your risk. That's a principle. It was there before cryptocurrencies, and it will be there after they're long gone, right? Have been replaced by something else. However, because of the explosion of different currencies, storing them and managing them becomes a right headache. So it's okay if you're investing in cryptocurrencies that say built on Ethereum, because then you can pretty much store them all in the same wallet, yeah, because they're almost, I don't want to call them derivatives, but they're built on the Ethereum network, meaning you can just have a hardware wallet like a Trezor and store them all, in your Ethereum base address. But then when you branch out, let's go back to my shopping list here. So let's see, Bitcoin, EOS, Dash, Populous. Actually, of all the things that I bought today, all 8 of them, they need their own wallet. So actually, that's not true. I could store my Bitcoin, my Litecoin, my Dash, and my Bitcoin Cash in a hardware wallet. I use a Ledger, so that's fine. I can store all 4 of those on my Ledger wallet. Digibyte needs its own wallet. The Neo needs its own wallet. And the EOS and the Populous, they're both Ethereum based, so I can store those on my Ledger as well. So that's most of them. But for the other 2, I would have to download a software wallet for those individual coins like Neo, and then store them in that until such time as one of the hardware wallets releases support for Neo. The challenge for the hardware wallet manufacturers is that they're getting requests all the time. Oh, when are you going to support Monero? When are you going to support this? When are you going to support that? And it's not just a case of like plugging a Lego brick on top of another one. The decision to support a new cryptocurrency means they have to study the code base, write it, test it, secure it, then launch it. And they have to have a sufficient amount of users that use it. Otherwise, all that goes to waste. So it's a big challenge for Trezor and Ledger wallets to decide which ones to support next. And it's not just a case of that. Every time they launch one, it's another load of maintenance. So if they support now 15 coins, that's been full-time business there maintaining the code base for that. So whoever solves this problem of somehow, I don't know how this would be technically pulled off, of having like a single point to store all your cryptos, no matter what technology they were based on. That's the Holy Grail, and whoever solves that problem is going to be famous.
Going to be worth many billions of dollars,
right?
Probably.
Exactly.
But from what it sounds like a big headache to trying to add in all these other cryptocurrencies if you're a storage company or a wallet company, because if you screw things up, you're going to get sued really bad.
Sure.
So if you lose.
Do you know what people do? They end up storing them on the exchange. Because if you have an account with, say, Binance, for example, and then you deposit some Ethereum and then go about using that Ethereum to buy a bunch of coins, right? Well, the exchanges, every coin they support, you've almost got an Ethereum wallet, a Digibyte wallet, every coin they support. When you open a Binance account, you've instantly got a wallet for each one of those coins, right? Because they have to in order to support the thing in the first place. So you can deposit and withdraw each one. So it's uber convenient to just have an account with Binance, for example, and then all the coins that they support, you can effectively use Binance as a multi-currency wallet for maybe 100 different cryptocurrencies. So it's so convenient, right? But Binance is a centralized company. If they get hacked or go insolvent, you don't control the keys to those wallets. So what happens if one day you can't log in? Your money's gone. So it's a trade-off here between the inconvenience of managing all the security and all the different wallets, everything yourself. That's maximum security, real big inconvenience, or you can go for convenience, but then you're taking a much greater risk.
Excellent point there. And look at the real world examples. I mean, there's people who still have many millions of dollars of Bitcoin at Mt. Gox, and they still haven't gotten it out.
That's very true. That's very true.
And then the recent hacking in Japan, I think almost over 400 million US dollars worth of crypto was stolen. And then I think over 10% of all initial coin offerings have been hacked as well. So it's kind of, I don't have the technical background to understand everything here. But, when I see all these thefts, it scares me to want to put in as much money as you have put in of your total portfolio into there. Now, obviously, I have some exposure, but to put in as much as you have, I just don't have the technical understanding to protect my Bitcoins or want to put in that much because I see all these headline stories about all the hacks and the theft.
Well, I don't store any of my coins on the exchanges. So I'm never worried about security, right? The only thing I have to worry about is the fluctuating price, and I can deal with that. So that's absolutely fine. The coin check thing, the Japanese exchange that got hacked, that wasn't the fault of, it was the NEM cryptocurrency that the hackers stole like 500 23 million NEM tokens. And I actually did a story on this. That was a failure by the exchange to implement a multi-signature wallet. And the way I describe multi-signature wallets is like, it's a wallet that requires two keys. If you've ever seen like a movie like Ocean's 11 and so on, where they go down to the casino vault and two of the security guards get their keys out and they stand on either side of the vault door. They both put their keys in at the same time and go 1, 2, 3, turn. That's a multi-signature lock. So the machine knows unless both keys are present and are turned at exactly the same time, the vault doesn't unlock. You can do this with Bitcoin and cryptocurrency wallets. They're called multi-signature wallets or multi-key wallets. The NEM cryptocurrency has a multi-sig feature built into the actual protocol. It's just that CoinCheck didn't use it, so that the hacker, once they got the single key for that wallet, they just signed a transaction to say, send all the money to me. Boom. If it had been a multi-sig wallet, well, they would have to get all of the keys. It may have been needed 2, 3, 4, or 5 different staff members to come and sign the transaction. So if they proposed a transaction to say send 500 million tokens outside, well then everyone would have looked at it and gone, we don't recognize that transaction, denied, right? So it's not the NEM developers put that feature there. It was the failure of the exchange to use it. So that's one of the risks with an exchange. You are trusting a company with your security.
It sounds like people are going to have to constantly read news articles or subscribe to maybe in your newsletter and your podcast to get updates on security measures that are being added, because this seems like a cat and mouse fight between the hackers trying to test the blockchain codes or the exchanges trying to steal cryptocurrencies constantly. And so people are going to, if you have a lot of money invested in cryptocurrencies, you're going to have to keep up to date with the new storage devices and the new coins to figure out where to store them.
What will protect you most is patience, I think. Be thorough with what you do. So today, while the markets were falling quite hard, because I'm a long-time meditator, I've kind of got this ability anyway, but I've got this requisite mental discipline to do one trade at a time, right? Even though, because I was like, this is massive opportunity. Whenever the prices fall, that's opportunity to me, right? So I'm like, all right, it's time to act. But I bought each one of those coins one by one, right? I took my British pounds and I transferred it to Coinbase, I think it was, and then bought like a certain amount of Ether, transferred it to an exchange, bought the coin that I wanted with it, transferred it to my own wallet, then went on to the next one, right? And I was willing to give up some of the opportunity because I thought if in the middle of this exercise, because it took me a couple of hours to complete the whole thing because I was doing it sequentially. I was concentrating one trade at a time. And I didn't move on to the next one until I took my crypto off the exchange, got it in my wallet, then the process was complete. Then I started the next one. Now, this requires like ungodly amounts of patience, but this is how come I can sleep at night, because I know all my crypto is secure in my own hardware wallets and so on, right? And I figured if by the 5th coin the markets have turned around and I have to abandon my shopping spree, so be it. But I'm not willing to rush ahead and compromise security, right? So that's the thing that will stand you in good stead. It's like, I can't remember, I think I got this from one of my old Forex trading mentors that said the money you lose is harder to get back. If you lose 50% of your money, you actually need to double your money to get back to where you were. And it's easier to lose half than it is to double. So preventing a loss is like the most important thing.
I agree. I think it's very sound advice. And this has been an amazing conversation. I actually have a lot of other questions that I asked you in the previous interview about altcoins that our listeners are not going to get to hear on this interview. Hopefully you will agree to come back for another interview in the future. One more question before I let you go. So a lot of people, technical experts who've made a lot of money in Bitcoin and other cryptocurrencies that I've talked to or read from, they all seem to basically just bash Litecoin, really nasty criticism. Oh, it's just a copycat, it's useless, it doesn't provide any value or anything like that. Do you think that Litecoin is unfairly criticized?
Well, I think so. I think we're in the clear display of ignorance territory again. Because it's like, who is saying this, right? Anyone who is actually using these cryptocurrencies, I believe will have a different opinion, right? So I hear something like that, and I just go to my own experience and I go, what? Let me tell you how Litecoin saved my part of my business. So Cryptoversity has an affiliate program. And I thought it's Cryptoversity. So if we have an affiliate program, we should probably be paying out commissions in cryptocurrency. That's logical. So got all the tech sorted out and yada yada. So people refer students to Cryptoversity and then they get paid at the end of the month in Bitcoin. Until such time as the Bitcoin network got absolutely flooded with transactions, and then the backlog was for days and the fees went up to $30. And I'm like, okay, sometimes affiliates are being paid like $50 or $100 commission. And I'm like, well, it doesn't make any sense for me to pay a $30 transaction fee. I'm like, I'm going to have to do something. So I switched to Litecoin. right? I just sent an email out to all of the affiliates. I made it a requirement for new affiliates to give me a Bitcoin address and a Litecoin address. And then from then on, every month, I just went, right, how much commission are we owed against all of the affiliates, right? Bought that much Litecoin, sent it to everybody, cost like a penny per transaction. So I don't know what people are talking about. That's a direct solution to a real problem. Litecoin actually solved a real business problem of mine. So it's easy to be an armchair critic if all you are is just a hodler who buys Litecoin and holds it and then reads Reddit. If you are actually using these tools in the real world, especially in business, you will change your tune pretty quick.
I agree. And I've spoken on Twitter with cryptocurrency traders, and they tell me it's cheap, it's easy, it's fast, it's efficient to use Litecoin to go when they're trading from one cryptocurrency to another, that they experimented with other cryptocurrencies, and the easiest one to actually move from one crypto to another was Litecoin, which seems to be, to me, to be, a transactional. It actually seems to be performing a useful function for society.
It does. And I did most of my shopping today with Ethereum because it has the highest trading volume and the greatest market cap. And a lot of coins are now traded against, by default, Bitcoin and Ethereum as the base currency. It used to just be everything traded against Bitcoin, including Ethereum. But as Bitcoin got a backlog and fees went up, exchanges started to create markets where Ethereum was the base currency and things traded off that. And now Bitcoin and Ethereum are sort of now the base currencies. And also there's now an exchange called Coinex. Yeah, Coinex.com, which is actually a London-based company. And they were the first exchange to use Bitcoin Cash as the base currency. So everything trades against that, which is interesting.
Very well. You are a wealth of knowledge, my friend. So we're definitely going to have you back on in the future. And I think my listeners should definitely, if they are thinking about buying cryptocurrency, or they're already owning it or trading it, I think they should. You're definitely a source of information, an expert in the field.
Thank you, mate. Appreciate it.
Well, if our listeners want to subscribe to your Cryptoverse podcast or check out Cryptoversity, please tell them about that and how they can sign up.
Sure. There's a central place where you can get to everything that I'm involved in, and it's cryptoversity.com. So it's crypto as in CRYPTO, and then versity like university, it's VERSITY. Cryptoversity.com. From there, you can get to the courses by clicking on the courses button. If you go to the podcast page, you can get to the podcast. Also on that page is all the social networks that I'm on, so you can click and follow me on your favorite one.
Excellent. Well, hopefully this thing recorded right, and we can move forward there. I look forward to talking to you in the future and learning more from your podcast. I think this is going to be a valuable source of information for our listeners here, because there's just pretty much everyone in finance and on Wall Street has an opinion on cryptocurrency, and unfortunately not a lot of them are very valid.
Right, sure. You got to have an informed opinion. That's the key.